Hello, everyone. Welcome to this month's episode on Move Smartly. It is a special one. It is our first real estate roundtable with our new guest. Welcome, Ben Rabidoux. Thank you for joining us. We're going to have a great time.
Hey, John, thanks.
And Steve Saretsky, of course, from Vancouver, always on the show. Steve, looking forward to hearing your thoughts on what's going on in Vancouver's market.
John's the new host here. Budget cuts.
I'm the new host. I'm firing the questions. I'm taking over Ermi's job, and Ben's taking over my seat. And
You're
we're
nowhere near as good looking as Ermi was. It's unfortunate.
she'll be flattered. She'll be flattered by that. And Ben living the dream, of course, in the cottage. We were just joking. His cottage looks nicer than most of our homes.
Post the address.
I know. So
Yeah,
let's kick things off, Steve, with you. We'll chat a little bit about Toronto and Vancouver, but maybe chat a little bit about what you're seeing on the ground in Vancouver, and then I'll go in Toronto and then see what Ben's seeing.
Yeah. It feels like it's, I don't know. Everybody, there was kind of like a little bump, I feel like in September maybe, and then John kind of just cooled right off again in October. I think it's been one of those years. It's kind of like you have a busy, couple weeks, and then it just kind of dies off. And I think that's kind of what we saw, and like that obviously is now reflective in the October data. I think sales were down something like 20% on a year-over-year basis.
Oh, wow.
New listings were up, so it's basically it's a continuation, which is effectively listings continue to outpace sales, and I'm still seeing downwards pressure on prices. I think you're seeing as more sellers that have been sitting on the market are getting, I think, a little bit more desperate as we get closer to year end. People sitting on stale inventory that want to move are having to face reality, which is they have to reduce. And I think that we're seeing those reductions coming through, and we're seeing that in home prices. I mean, it's kind of showing up in the benchmark. We can kind of get through the nuances and some of that, but again, I don't think the HPI is fully reflective of the price declines we've seen this year.
Mm-hmm.
You've been reading my research, Steve. That you're stealing my thunder.
That's because we talk all the time.
So what are you seeing in terms of price declines in Vancouver, like year over year?
I think if you look at Greater Vancouver right now, you're seeing I don't know, it's such like overall 3.4% year over year. But if you start splicing it out, condos are down 5% on a year over year basis. But I don't know, for you guys, I would say if you're selling like a condo today, I think you're down 10% this year. This year, from Jan 1 to where we are today, I think you're taking 8 to 10% lower. So I don't think that benchmark is fully capturing the true extent. Yeah, I think that's look at condos average price per square foot sale price, we're down 6% year over year. That feels a little bit more accurate, but again, I still think it's closer to 8 to 10.
That's interesting.
Can I jump in, John, and just
Yeah.
comment on that? Because I think you said something really telling there, Steve, and I think it's worth just kind of filling the listeners in on the dynamics at play. So when we talk to anyone in the real estate space, and John and I were talking offline before we got on here, but most people would agree and sort of express a similar sentiment, Steve, which is that prices appear to have sort of accelerated. They've seen accelerated declines in the last few months that are not fully being reflected in the HPI. So I think what you said is really telling. You're like, the official condo prices are down 5% according to the HPI, and that's the house price index for folks listening. But that realistically, if you had to sell a condo today, you're probably down 10% or more from where you were a year ago. So I think one of the things that might be happening, and it's a little too early to tell, but the way the HPI methodology works is they look at a whole bunch of sales over time, and then they strip out what they call the outliers, anything that's sort of 5% plus or minus, kind of the bell curve of distribution. And so normally that doesn't matter in a sort of typical market. But what it can mean is if you get a point where you get like a sudden inflection in the market, either direction, either up or down, where all of a sudden things start selling, at really high prices or at steep discounts, it takes a while for that to show up in the HPI because that gets filtered out through this kind of normalization. So I don't know if that's what's happening, but I'm hearing it enough that I'm wondering if the HPI is understating how much prices have come off in the last couple months.
I think it is. Like, I don't know, like just this, what I'm finding, again, like anecdotal, is, to me it feels like the houses that are move-in ready, turnkey, in like good locations, yes, they'll still sell relatively well, usually in a couple weeks, usually fairly close to list price. And I feel like you have like everything else, which just like sits. You're almost competing on price because like you don't have nothing that is unique about your property. You're just kind of like, you're just stuck there in the weeds. And I feel like that stuff is basically just not clearing. Or if it is clearing, it's clearing at a significantly lower price. And so, yeah, I just kind of wonder if a lot of the bad stuff that just doesn't sell doesn't ultimately get reflected in some of these price metrics.
Well, and alternatively, real quick, and then I'll turn it over to you, John. But alternatively, I think one of the things that could be happening is we are seeing an uptick in power of sales. And the one thing about a power of sale listing is you have a somewhat distressed seller that effectively has to hit the bid. So they don't have the luxury of a typical seller that can wait out and try to hold out and hold firm for a better price. And I wonder if we're seeing just that stronger flow of power of sale sort of forcing a pricing discovery function. And that the prices are coming down as a function of that, but yet again, not being reflected totally in the HPI. So anyway, that's a long-winded answer that's probably appeals to only a handful of the real data nerds in the audience. But John, does that ring true to what you're seeing in Toronto?
So before I talk about Toronto, one thing I was going to say is I think it does ring true, but I think the power of sale stuff that you're talking about is not so much the power of sale that are distressed, because at that point it's owned by the bank. They're going to hold out to get the best price. I think what you're talking about, and I agree with, is that for every 1,000 power of sales, there's 3,000 or 4,000 people that are on the verge of defaulting. And they are the ones that would rather just sell, even if it's at a discount, on their own terms, rather than being kicked out of the house, right? And I think that could be certainly one of the factors that is pushing prices down, because it has to be true. It's got, for every one power sale, there's got to be 3 or 4 that are in 60 to 90 days arrears or close to that, right?
Yeah, that computes.
And I think
and do you think that's recent, John? Sorry, like, is that something that you think you're seeing more of those sort of shadow distress sellers appearing in the last few months?
I would think so. Yeah, like maybe the past six-ish months or so. I think it's like people have been holding on, you know what I mean? And like they've been waiting for the market to recover, and they just can't, right? And I think like the one thing with the power sales, I think a lot of people, I mean, at least from my perspective, I mean, before I even talk about the stats, we're going on a tangent, but my feeling is like, I think a lot of this is not even all labor market or whatever yet, or high rates. I think it's just that for years and years, Canadians were living beyond their means, many of them, loading up on debt. And every 4 or 5 years, when their mortgage is up for renewal, we're just rolling that over into their mortgage debt, right? And it was a system that worked well while prices were booming. But now that they're not, everyone who is living beyond their means is getting forced. And I think that's I suspect that's the bigger pool of the power of sale people, right?
Yeah, that's interesting.
But my 2 cents. Yeah, I mean, Toronto's.
Go ahead, John. Well, I was just saying, we're seeing like we don't have power of sale in all right, I guess we call it foreclosures. Ben, I think it's a different process. Like I think it's a lot more long and drawn out from the time that you miss a payment to the time the lender can actually basically force a sale.
In BC, yeah, that's true.
Yep. Yeah, so I take a look at the number of foreclosure listings on a monthly basis, and like it's really growing. It's still below like 2010, 2011, 2012 levels. But you can see clearly at base sort of like during the pandemic, and it's growing pretty aggressively.
Interesting. Toronto stats, I mean, kind of like Vancouver. I mean, sales are down not quite as much. We're down about 9% year over year. Now, it's worth noting, like last October, I mean, at least in Toronto, we actually had a bit of a rally. Third quarter of last year was actually pretty busy. And I was looking at the stats now. October 2024 was actually up over 40% year over year compared to 2023. Now, that was off of a 20-year low base, but the market actually accelerated the last quarter of 2024 because sentiment had improved. People thought the market was going to boom in 2025, right? And now, of course, that didn't happen. So now we're kind of down 9% year over year. Inventories, 20 to 30% more. So we're seeing price declines. Now, I think in the context of price declines, like I think if we look at average and median for low-rise homes, we're down about 7% year over year, which I think is relatively accurate. That's like about 100 grand. I think we're at mid one threes last year. We're at mid one twos this year. I think that tracks just as an average. Some areas are more, some areas are less. But certainly when you guys are talking about the condo or the stats not reflecting the market, when I look at condos, it's like average price is down 5%. And I'm thinking, well, I don't know if it's just down 5%. Like it feels like you need to be priced a lot lower than 5% a year ago to sell in this market. So that's the segment where, yeah, I do feel like the averages are not kind of really reflecting what's going on. And there's definitely a lot that are seeing like 10 to 15% less than what, similar units sold for in the past 12 months.
So what do you see on the cancellation side, like moving, because like we're basically in November now.
Yeah.
So you're kind of getting to like the slower period of the year. Like, John, I imagine like in Toronto, there's a lot of like frustrated sellers that are pulling listings. Like if I look at Vancouver's number of listing cancellations, it's like literally double what it normally is over the last 3-4 years. So you basically just have all these people that are like pulling listings off. Some of them obviously relisting at lower pricing. But listing cancellations, we're having a lot more conversations with sellers saying, listen, we tried this year, it hasn't worked out. Let's pull it off and like we'll see what next year looks like.
Yeah, I mean, I was looking at those stats. I saw you tweet it just before we jumped on the call, and we're definitely higher than last year. I don't know if we're like double or what we normally are, but I did run some stats. I can't even remember, maybe 3-4 months ago, and there was definitely a huge increase in cancellations of condo listings from condo owners that just decided to rent them out. And that was like a like much higher than than last year, for example. And again, these are like owners that are just like, you know what, I don't want to take a huge discount. I'm just gonna lease it out and hold on. Which, for many people, they're deeply cash flow negative, but they'd rather not lose money, I suppose.
Is your months of inventory for sale declining now?
It is actually, yeah. It's funny you say that. So yeah, so we fell. Low rise was around 5 months. We dipped to like in the low fours, 4 months of inventory. Condos were at 7. We're down to 6. So I mean, I don't know if that's a bullish signal or just the market kind of adjusting a little bit, but
yeah, we're the same way. Like Ben, I know you and I have chatted about this kind of off the air before, but like. Yeah, it's hard to say how much of this is seasonal, just from like frustrated sellers pulling inventory, because you're not seeing you're not seeing a spike in sales, right?
Oh, yeah.
But if you look at like our months of inventory went from 9 months in September down to basically at call it 7 now.
Oh wow.
Yeah, there's some seasonality to that you got to be careful of.
Yeah, exactly.
Yeah. But yeah, no, I think I'm seeing to some extent, like one of the things I've been surprised at in Toronto is that the condo inventory has not been rising. Actually, it's effectively flat year over year for condos, which I didn't really see coming. And actually, the increasing in inventory has come from the single family segment. So I'm a little surprised at. So that kind of computes when you were saying that you're seeing a lot of canceled listings coming out of the condo space.
Yeah, exactly. Yeah, and we were talking about it before the show. I mean, I think it's the single family space, at least for me, has been a little bit surprising. In some ways, it's like weaker than the condo space, which. Yep. I don't know too many people, who follow the market who thought that was going to happen, right? But
totally agree.
Which I mean, I think kind of touches on something that you mentioned in your report. And for those, I mean, in the real estate industry, Ben publishes a great report. You can go to Edge Realty Analytics with a lot of market macro commentary. And kind of one of the things you said that stood out to me I thought was interesting, where you said that you actually think what's holding back the market now is not so much affordability, but consumer sentiment and confidence. And, this is what is keeping effectively sales as weak as they are, which I thought was super interesting.
Yep. Yeah. So, well, look, I mean, I'm going to get a lot of pushback for saying that, but here's the reality. So if you look at affordability, in terms of monthly payments as a share of income, we're back to 2021 levels, which I'm not saying that affordability is good by any means, right? It was not good. We had talks of affordability crisis in 2021. So it's not a good situation. But in 2021, even with affordability challenged, home sales, especially in Ontario, were 50% higher than they are currently. So I'm not saying that affordability, that issue has been solved, but I think even with affordability where it is right now, there's room for home sales to improve. So then the question is, well, what's really holding it back? And when you pull up a chart on consumer confidence, I mean, we're just unbelievably low. Like I was looking at it. I mean, it was in the same report you're referencing, John, but we were looking at consumer confidence, and there's basically been kind of three periods where it's been lower in the last 30 years. One was during the financial crisis when we thought, the system was going to melt down. One was in the early days of COVID when we were all locked up and had no idea what the hell was going on. And then the third was in March of this year when we had the whole tariff thing blow up. And so the fact that we're like marginally above those levels and effectively on par with where we were in 2009 is a wild thing to see. Like there's an irrational level of pessimism in the market, but you can't argue with it. Like people feel what they feel, right? And so until that improves, I think sales are kind of stuck here.
Yeah, I think you're 100% right. And I think we're so used to thinking about sentiment driving the market on the way up, which it obviously did in 2021 when sales were a lot higher. It was all hopium to use a Ron Butler term. People just expecting price to be higher, but it works the same way on the way down. When sentiment is negative, people just sit on the sidelines, and it's like almost like the same way it's like this self-fulfilling prophecy on the way up. It kind of does that on the way down. If people just aren't bidding, it kind of pushes the market down a little bit. So super interesting. Now I want to chat a little bit about rates. I mean, Bank of Canada outlook, obviously they cut. What stood out to you guys in their announcement, like the monetary policy report and their outlook? Ben, I'll let you start with what you're thinking and seeing in the head for rates in Canada and the economy, quite frankly.
Sure. Well, I think they were pretty clear that they see rates where they are currently as pretty, I guess, appropriate for the state of the economy. So that actually, it's funny because they cut rates and yet bond yields, which drive fixed mortgage rates, actually went up on the cut. And the reason for that is that you had these comments from Tiff Macklem at the press conference, basically being like, "No, we think we're good here for a while." So I'm a little surprised at that. I still have the view. So just to be clear, the market is saying that we're done with rate cuts for the cycle. If you look at how the curve is priced, they're saying this was it. This is the last cut we're going to get. So rates at these levels, interest rates, mortgage rates is as low as they're going to go. I still think we have two more cuts coming. I think we've got to wait till probably towards the end of the first quarter next year, because I still think that the economy is just fundamentally not going to work given where rates are at, given the trade tensions, given where consumer confidence is at, given the looming drag from a steep slowdown in construction that's on deck. I think for all those reasons, the economy will continue to be weak and will need additional stimulus. That's where I land. So I still think we have two more cuts next year.
That's interesting. I mean, one thing that stood out to me was their forecast for GDP, which was, I think it was like 1% next year, 1.1 or 1.6 the fall, which to me seemed a little bullish. You know what I mean? If we're worried about a recession, positive economic growth, even though it's only 1-ish%, I think is better than I think I would have expected. I mean, I think most people were worried about negative growth, quite frankly, and So do you think their outlook is just a little rosy, just given, like we said, where the economy is going, where the construction jobs are going, all of that?
Yeah, I do. I think we're going to flirt with recession next year. And I think you're seeing this in some of the labor. I also think like the jobs market is just weaker than people realize. One of the things we've been seeing for really the last 6 months or so is that, I mean, the unemployment rate is going up. Everyone understands that. But when you sort of parse the details and you look at what's actually happening under the hood, it's really quite interesting. We have not seen job losses until very recently. Now you're starting to kind of see some real announcements. I mean, really no job losses. And yet what you were finding is that if people became unemployed, they would be unemployed for a long time. So the ranks of the people who have been unemployed for more than 6 months have absolutely exploded. So what that tells us is if you lose a job, it's really hard to find a new one, right? Which tells us that businesses are not hiring. And I think what we might be seeing is the early impacts of AI on productivity at the entry level, right? For because we know that like for college grads, it's particularly hard. And I also just think there's a lot of uncertainty out there where people are going, well, we don't want to, or businesses are saying, we don't want to have to lay people off 6 months down the road. Why don't we just not hire anyone and kind of wait and see? And so that has been sort of the landscape over the last 6 months. Now you're seeing real job losses on top of that. So I think there's a real chance here that the labor market starts to get really soft in the next 6 months, like much more so than I think people realize. But and if that's the case, then I think they have to cut.
Yeah, I still think the big thing that's super interesting, like, is you've had these cuts from the BOC, but at the end of the day, like, yeah, that 5-year bond yield's down 30 basis points this year, which is like, effectively like your fixed rates really haven't moved for the vast majority of people, right? I mean, like most of our clients there are picking up mortgages fixed at like call it about 4%, which is kind of where we started the year. So like, I guess, Ben, I'm assuming you're seeing like more and more people going into the data. You can see more people going variable rate mortgage, but I mean, your variable today is what, prime minus call it 0.8, gets you down to maybe a 3.75. So it's really not that much different than where fixed rates currently are.
Yeah, right now the most popular kind of mortgage type is the 2 to 3 year fixed.
Yeah.
Sorry, 3 to 4 year. So what I'm hearing is a lot of people are opting for 3 year fixed, which seems to be that best kind of combination of good low rates, prepayment penalty or early break penalties. So that seems to be the most popular. I have no view on whether that's going to be the right one. It's a weird time because you're right. Like a lot of the juice has been kind of squeezed out of that the kind of the mortgage market through these low rates. There's no really easy, there's no layups in the mortgage space. Like I'd say 6 months ago, it was really obvious you should have gone variable. Today, it's really hard to know where the best option is. I would probably go kind of that mid, kind of 2-3 year fixed.
Dicey.
Interesting. So what is the thought on, I mean, you touched on this in your report, but maybe you guys, what are you seeing like the inflation risks? Obviously, one of the concerns was it ticked up a little bit, at least in Canada. Do we see that kind of weighing on the BOC's decisions at all, or no?
I mean, I don't think so. So the way I look at it, you've got two big factors driving headline inflation that are going to come off this year. The first is rents. According to the Stats Canada, you're still seeing rent growth in aggregate of kind of like almost 6% over the last, annualized over the last 6 months.
I don't get how they calculate.
Which no one believes that that's accurate. And not only that, Stats Canada is showing that rent are accelerating to the upside. There's nowhere in the country that's happening.
I just wonder who they've got running the numbers and the surveys on that. I'm like, I don't know,
it's so wildly out of touch, right? So look, the Bank of Canada knows that population growth is extremely low, that we've got a lot of rental supply coming. They know that the rental component's going to continue to trend lower like for the next year. So that's 4 percentage points of headline GDP. And then mortgage interest costs are another 3 percentage points. So, and that's going to zero this year. Like already mortgage rates are below where they were a year ago. So that just takes time to filter through. So that's 7.7% of headline inflation that's going to drop to zero this year. So like there's a lot of room to absorb other increases. I don't think inflation is a concern at this point.
Interesting.
We're dealing with a client right now, Ben, where like downtown Vancouver, and like it's a pretty decent building. It's, I don't know, 15 years old. Like it's move-in ready, 2-bed, 2-bath. And like this would rent like all day long the last couple of years for like 3,500 easily. And like they're not getting anything at 32. And like they're being told by their property manager that like it's 3K now. Like we got to lower the price. It's 3K. So like, yeah, I mean, 35, I mean, probably at the top of the rental market in what, 21, 22, they probably would have been, I bet you they probably could have fetched 37.
Wow. It's rents are down that much over, that's quite
and I think
I think so.
Like, part of it is like downtown, there's a little bit more of a stigma and like, like people just don't want to be, kind of in the thick of it. But like in general, like, yeah, I was shocked about how soft it was.
Mhm.
But what's interesting from that, Steve, is that you're going to see the rental stock in Vancouver specifically grow almost 15% over the next couple of years as these units complete. And that's kind of the combination of primary, so purpose-built rentals plus new condos that are going to enter the rental pool. Like 15% into an environment where population growth might be flat, maybe 1 or 2%. Like if you're really lucky, you're going to get a couple percent. There's just no way, like the math just doesn't work. Like you're going to have a significant uptick in vacancies. There's no way around it. The Bank of Canada knows this.
That stable rental market, though, I think takes a ton of pressure off the resale market too, right? Like think about how many people were buying, condos because they're like, I'm so sick and tired of my landlord. Every 2.5 years he's selling because the market's going up. He's getting this huge price, and there was just a lot of like forced turnover. I think a lot of landlords now are going to be trying to hold on to their tenants, right?
Oh, big time.
That's a
Yeah.
great point.
Yeah,
Yeah.
absolutely. Let's turn the chat to something I know you both have thoughts on. I think we all have thoughts on. Steve, you tweeted this out or retweeted our fine prime minister who said glowingly that housing starts were up in September. That's good news for younger Canadians looking to buy their first home. We're focused on bringing supply up so your costs come down. Steve, I'll let you kind of share your thoughts and hear from Ben too.
Yeah, I
And
know Ben and I have a lot
yeah,
of similar views, but like I always just look at what the recipe is for a housing start, which is like housing starts is effectively building back to grade. And that can be, you gotta basically to even contemplate a housing start, you have to have pre-sales. And so looking at the pre-sale market, like what was it in Toronto? There was like 30 or 40 condos sold in the month
50,
of
yeah.
September
Yeah,
in the
50.
entire city of Toronto. So like it seems like John, you would know a lot better than I do of that market, but like you got pre-sale volume running up 90% below the long-term average. I think in Vancouver, like it's bad. I think we're running at like a third of levels that we're used to right now. We got the largest pre-sale marketing firms laying off huge swaths of their staff. Every conversation I have is just developers that are canceling projects. And so I don't know. For me, it's just like the writing's on the wall. I think housing starts are going to drop off dramatically.
Yeah.
Ben?
Yeah. No, Steve's exactly right. You don't have to wonder about this. Like you can chart out the trend in new like pre-construction sales versus housing starts, and it's a perfect correlation with an 18-month lag. We know that starts are going to be way lower. I think what people are missing is that the entire construction industry right now is being underpinned by this rental construction boom. And so the one thing I wonder, Steve, and we're gonna get an answer to this later today in the budget, but I do wonder if the government's not going to roll something out to stimulate rental growth even further, rental construction, I mean. And so one of the things that they had contemplated was the reintroduction of a program that was really popular in the 70s and 80s called the MERB program, the multi-unit residential building tax program. And the basic gist is if you're a high income earner, so like actual T4 income, like salaried income, if you invest in the construction of a new rental building, you get an accelerated depreciation that is applied directly to earned income. So it becomes this unbelievable tax break. If they roll that out, it will, I mean, that's the only thing that I can see that will keep housing starts very robust because it'll be really popular. The downside, though, is you're just going to introduce a ton of more rental supply. Like it's really then becomes negative for existing landlords. I would suggest.
So what's interesting? I've been kind of toying with this idea. Is I agree with you. I'm from what I'm hearing through the tea leaves, there could be like a large budget allocated to city infrastructure, right? So like maybe like if the feds basically come in and effectively say, listen, the development industry is at a standstill. We have to make the numbers work. They have to pencil better. And one way to do that is to basically chop these development charges and fees, which ultimately cover the costs of infrastructure upgrades. So does the federal government to stroke larger checks to all these municipalities so they effectively allow them to cut their development fees to get that if not, to Ben's point, are we going to completely change the way new housing is built in this country over the next 5 to 10 years, which is effectively removing completely away from the pre-sale model, which is sell 60, 70% of the building to pre-sale investors and then get your financing and build, to we're going to jam everything through CMHC and through these MERB tax incentives to basically go all rental. And like that's the direction we're going to go over the next 5 to 10 years. If so, I think it's very interesting. I mean, I'm just thinking about it here in Vancouver when you have the largest pre-sale marketing firm chopping their staff by 25% and knowing that there's some very successful companies right below that or that are on like life support right now is, I don't know, I find it very fascinating.
But I think that's the path we're kind of on. Like if you look at what we're building, I mean, this is kind of what made, I feel like Carney's, I mean, I like honest politicians. I feel like his comment was a little bit misleading where he's talking about, helping Canadians buy their first home. I mean, the number of how, I mean, and Ben knows the data better, is in his charts, but the number of housing starts or under construction that are to be owner occupied homes, low rise or homes, are actually plummeting. They're actually negative, right? The only thing that is actually keeping it up are actually rentals. So yeah, you're right. I think we're on the path where we're only building rentals. I mean, I will be surprised if they go ahead with this MERB program because at the end of the day, the rental market's booming already. I feel like that's just like throwing gasoline on the fire. You know what I mean? Like,
Yeah, no, I agree with you, John. I don't know though what they'll do to kind of underpin the construction industry, given how significant a portion of the labor market it is. So I'm with you. When they first rolled it out, I said like, or when they first sort of publicly toyed with the idea, I was like, man, I mean, it's a great idea if you were trying to float the construction industry. It's a terrible idea if if you're an existing landlord. It's just a ton of price insensitive investors competing for rentals. Like it's going to be brutal. So
yeah.
we'll see.
Entire business models, though, have been shaped in this pre-sale idea over the last 20 years, right?
Well, that's what's been fueling it. I mean, I wonder if the only way they're going to help it going forward, like, so a lot of builders, I feel like condo builders are like gravitating towards either building purpose-built rentals or trying to build condos that are end user owner occupied, right? But the second category is harder because they still need like 70, 80% pre-sales. And I wonder if the better strategy for the feds is to help those builders by not requiring 80, 70, 80%, maybe 30, 40%, the way a lot of other countries work, where builders build a little bit on spec, they build the type of units they think end users will want. And I think that maybe that's a better approach because the mom and pop, and we all kind of seem to agree, the mom and pop investor buying pre-cons isn't going to come back for 5 years, if it does come back, right? So why not stimulate end user condos by, taking off of this financing restriction? And that's the challenge. It's like the average family is not buying a condo that they're going to take possession of 3-4 years down the road. So it'll be interesting to see how that all plays out. Now, before we chat a little bit, actually, I want to go on to something that I have not tweeted about. I've been kind of a little bit off of Twitter, but it is highly relevant, and you've both chatted about it, are land claims in Richmond, BC. So,
oh man, the hot button stuff.
Steve, you tweeted about am I saying it right? The Cowichan First Nation. Cowichan, is that how you pronounce it? Okay, Cowichan First Nations land claim. Maybe give us the background. You tweeted out a letter that residents in Richmond got from the mayor. So, I mean, maybe kind of unpack at a high level what the heck happened for those of us on the show who aren't familiar with what's going on in Richmond.
Fun story. I actually lived in Cowichan for a year and grew up in Richmond, so I'm caught in the middle. I mean, effectively, yeah, it's high level. Not 90% of the land in BC is unceded, it doesn't have treaties, and so effectively there's this Supreme Court ruling that effectively allowed basically said that the two titles can coexist. So now the First Nations can coexist, their title can coexist with your fee simple title, which, like, for a judge might sound good or reasonable, but for a lender and an investor does not work. I mean, there's, go tell the bank that you coexist, your title coexists with the First Nations tribe, and they're going to look at you pretty funny. So I think the challenge here is like this is going to probably be a battle in the court system for many years. And so the question is really is like who is going to buy on these lands that are impacted? If you have a condo or a house in these contested lands, I mean, as your buyer's realtor, I'm not telling you to buy in there. So, I mean, I think you have land or condos now that are completely illiquid until this gets resolved. I think the government's ultimately going to have to stroke a check. But I think the bigger question is now is like, well, if this happened in one part of Richmond, 90% of the land in BC is unceded. So which tribe is coming out next to take or contest a different part of land? Maybe it's somewhere in Langley or Surrey or Vancouver. Like I don't know where it is next, but I think it's created a lot of unease where like I even have people like calling and emailing now and be like, hey, like what does this mean? Should I not buy in Richmond anymore? And it's like, I don't know, because nobody knows like where the next claim or dispute will be. So you can't base your future decisions on that. But yeah, I think it's a real problem, and I think that it's going to be a challenge with financing as well. Like again, banks want to know if you have clear title. So they haven't come out publicly because I think let's be honest, there's a reputational risk here, right? Like RBC doesn't want to come out publicly and say we're not landing on this First Nations title land. I mean, next thing you know, there's going to be protests outside all the RBC branches because they're anti-reconciliation.
A tough situation. I mean, you know, I think I think the feds. So the feds. I think it was every level of government that was part of this case, if I'm not mistaken. It's like the feds, the province, and the municipalities, and some private landowners impacted. Um,
Well,
and
David Eby was out yesterday. I don't know if you guys saw the interview, but someone asked him about it, and he said, "Oh, we were assured by the Supreme Court that they would not impact fee simple title, and clearly it ended up not being the case. So
Mhm.
it's kind of like it's interesting. He's like, "Oh, okay, so the courts effectively assured you this, but now that wasn't the outcome." And it's like, it's obvious they had their hands in the
Yeah, I mean,
middle of all
and
this.
for those, I mean, on the show who aren't familiar with fee simple, I mean, the idea is like this: the second your name is registered on title for a parcel of land, it's basically like a guarantee. No one can interfere with your ownership. It's rock solid, which is why the banks will lend you hundreds of thousands or even millions on it. There's no dispute if you are on title. In this case, of course, puts that all up in the air because now potentially this First Nations the Cowichan, First Nations land claim can argue that the title is potentially theirs or somehow shared, or you can live there, but once you sell, we're going to take it over. I don't even know how it's going to work, but obviously every level of government is appealing this. But you're right. I think the bigger issue is how is this going to impact homeowners, and are they going to mean I mean, we've already seen kind of additional court cases popping up in other provinces. I think I saw one in Quebec recently.
Quebec, Ottawa's huge part of Ottawa. Yeah, I think the funny thing is, Ben, and correct me if I'm wrong, I'm thinking, is it not, isn't Parliament Hill technically on unceded territory?
That's my understanding.
Oh, get out of here, really? I mean, I always thought, I mean, I did find these land acknowledgements, I mean, really interesting. It's one thing to acknowledge, obviously, the history of these communities, but to talk about it being on effectively unceded land, I mean, unless you're willing to hand it over, you're kind of just what are you saying then at that point, right? Like,
Well, it's funny because the city of Richmond and Port Coquitlam, which is maybe 30 minutes from Richmond, their mayors came out and says, yeah, we no longer do land acknowledgements at or in our city as a government because we are currently fighting and disputing with these First Nations tribes.
Well, yeah, the land acknowledgement is basically an admission that the land is stolen. I mean, it's a bit of a challenge.
It's a total cluster. I think that's kind of like, honestly, I think it kind of summarizes the state of Canada right now, which is like we just can't get anything done.
Yeah.
And like we're just trying to appease everybody, right? Whether it's the, First Nations, it's environmentalists, it's the NIMBYs, it's like everything. It's like, yeah, I don't know. Nothing gets done in this country because there's just so much layers of bureaucracy.
So speaking of appeasing the NIMBYs, that kind of leads me to another thing I saw, which I thought was interesting. And you had tweeted out actually that several cities, I think you said Burnaby, Calgary, and London are starting to roll back these multiplex guidelines. And I think even Edmonton, didn't they elect a mayor who's kind of against the multiplexes? I think he did.
I'm not too sure about Edmonton. I'm obviously quite familiar with the Calgary stuff because I'm involved a little bit over there. But yeah, they're going to scale that back. I don't know. They're waiting for some announcements, but I think it was just like too much, too quick, too fast that I clearly, it's disrupted some of the NIMBYs and yeah, I don't know. I think even in Vancouver, I think it's going to become a point of contention.
Was it too much, too quick, too fast? I mean, what do you guys think? I mean, are these people just all complaining, or
what do you think, Ben?
Well, I mean, look, we talked about this before, but I think the fundamental problem with how we build houses in Canada is we've sort of outsourced the responsibility for doing kind of the ground level permitting to municipalities where they're locally elected by people who are like, well, I don't want that shadow in my backyard. And they're just sort of like selfishly, incentivized to reduce future supply or keep it limited and thereby enriching the incumbents. And that's fundamentally the wrong way to build housing. So, the NIMBYs, like, yeah, there needs to be a more concerted effort from Ottawa to remove the decision making from the people who have to listen to these goddamn NIMBYs who don't make any sense. Look, there's much less of a dire need for new housing today than there was a couple of years ago, partly because we've sort of come back to our senses on immigration. And we've discovered that, hey, when you actually have more thoughtful immigration policies, all of a sudden you don't have such a housing shortage. Like, fancy that. So, but that still sets us up for times in the future where we will be significantly undersupplied if we can't figure out how to remove that decision-making process from these municipalities. It's the ones that at least aren't trying to add density and supply.
So, I mean, to play devil's advocate and to take the flip side, I mean, are there any situations where, I mean, and I know many of them are called NIMBYs, but is there any validity to some of the arguments? I mean, Steve, I remember posted a pic, I think it was like, I don't know, last month of like it just looked idiotic. It was like a 4-story laneway home or something stupid like that. Like, this monstrous building in your backyard, and, is there, is that reasonable? Like, you know what I mean? Should you have like 10-story buildings next to low-rise homes? Like, is there some periods where you sort of transition it? Yeah, maybe in very urban
I don't think
areas.
there's like I don't think there's any like right answer here. I don't know.
I know there isn't, but
I think it's going to be disputed for years and years. It's like a tale as old as time. But
I think, do you guys remember?
Was
you guys remember our former Bank of Canada governor put in a complaint about a development going in it
was TIFF, wasn't it?
It was
it was TIFF. It's our current governor. You're right.
Was it TIFF?
Who
was basically like
in Cowichan.
Right. And I think the whole issue was around, they wanted to put in like a daycare center. And it was like, well, there'll be more traffic.
Yeah.
Like,
I think
there's a distinction.
Yeah. To be clear, I think some of those arguments are idiotic. Like, obviously, Toronto's high density fourplexes is fine. I think my point is that if you listen to the YIMBYs, my only concern is that we end up looking like Parkdale. And Parkdale, for those who don't know it, is this weird mishmash neighborhood that, used to be low-rise homes, and then beside low-rise homes, you have a 12-story apartment building. and then you have 2 or 3 low-rise homes, and then you have a 12-story apartment building. Like it's just like looks like
Yeah,
unplanned, like, and I think this
of
is where
course.
and I don't know, I'm not a planner, but
I think this is the funny thing. You come back to like all these like politicians and policymakers is like the BC government, for example, tried to effectively force through high density across the entire province, right? They mandated multiplexes and they mandated transit oriented areas, which is effectively this radius. If you're in this radius, like you have to allow towers to be built.
Mhm.
Which again, I'd ultimately still say there's a role to play in these municipalities that they know their communities the best and how to sort of plan strategically for where housing should get built. Obviously, I think a lot of them have dragged their feet, but I'll give you an example. Like in Vancouver, there's a couple contentious projects, but like one is in this like 1980s it's all duplexes. It's in like Kitsilano. It's like all duplexes. It's like a nice street. It's got multifamily housing. And then like in the middle of like the block, there's just like one tower that's just been approved for 20 stories. And you're like, that's bizarre. Like, but the mayor's stance is like
More housing.
doesn't yeah, and it's like it's mandated in the TOA areas that the BC government created, and the city is just saying, yeah, we're approving it, even though the opposition was just like tremendous. You have all these like
Okay.
architects and city planners coming out and saying this is
But
horrible.
isn't the point to replace the duplexes with these more dense buildings? I mean, isn't that the point of what BC's trying to do?
Yeah, and I guess it's always a matter of like how do you phase it in? Should it just be townhouse? Should it be 5-story wood frame condo buildings, or should it be a 20-story tower in the middle of the block? Like I mean, I don't know. I mean, you can argue this. I think it's almost just like wasted effort because it's just like people are going to dispute and argue this for years to come.
But all of these upzoning things that BC did like 2 years ago, like under your previous, they were supposed to lead to like this flood of new supply. Like, is that actually happening?
Well, yeah, so most of the municipalities have like pushed back, which is like some of them just have said, "No, I don't care. We're not listening to you." Like West Vancouver, which is like the land of single family houses, wealthy people that like you move to West Van because like you want to be left alone. Like that's just the reality. And so like the mayor who's elected to do his job saying my constituents don't want multiplexes, we're not allowing them. And basically like we'll see you in court is effectively the discussion. So yeah, I mean that's where I come back and say, listen, like this, I don't know. I know the BC government's idea is listen, we were in a housing crunch and let's just jam this through. But I think we're starting to see that it's not gonna fly.
Interesting. Yeah, and I don't know what the balance is. I mean, the article that you linked had all these people who were complaining about someone who I think is in London who bought a single family home lot, applied to sever it into two. I think it's like 100-foot frontage. I think it seemed like it's a huge lot. So splits it in two, kind of makes it look like he's building two single family homes, but ends up building two fourplexes on each, and of course the neighborhood freaks out. But if you look at the lots, I mean, they're very big, man. They're like, it seems like they're building just 4 large rental homes, which I think is very reasonable. But the neighbors are freaking out now because all of a sudden there's 8 families on this lot when there used to be one, which I don't think is a little bit silly. But
Yeah, I think you hit the nail on the head when you said we need to find the balance,
yeah,
right? Because obviously I've put forward an extreme view that sort of characterized all NIMBYs as being these kind of like TIF-like assholes, and that's just not. I understand that's not the case. There's very real concerns along, but I think from a fundamental perspective, if you surveyed 100 homeowners and asked them, "Do you want additional density in this neighborhood or additional," right? The standard default answer is probably going to be no. We don't want things the way they are. Like we're creatures of habit, and that's the fundamental problem with the process. And I don't know how you overcome that, but I think you're right, John. It needs to come down to some sort of balance, and there's just I don't think it's there right now.
yeah, I think that's why they're getting pushed back. I mean, I will say in Toronto, the one thing I find encouraging is that I find most Torontonians are fine with it. I don't know, like at least people who live in the city. I haven't met too many people who are homeowners or home buyers who are freaking out about a fourplex going up next door because
Hmm.
it's allowed everywhere. So to me, that's kind of positive, but we'll see how it all
Yeah,
plays
that's good.
out. All right, guys. Before we any other final thoughts before we wrap up today's show on your mind? Key things.
No, just you did a great job, John. We're happy to have you, Ben.
You're not going to fire me?
Ben, it's
You
been
stick
a
around
pleasure.
for now, John.
Alrighty, gang. Well, thank you guys for joining us, and everyone, thank you again for another episode. We'll see you next month.